you actually got into Dell following earnings May 30th, and there was kind of a mixed reception to earnings. There's a growth story there about AI infrastructure, and there were some near-term concerns. But let's start with why you looked at Dell and thought, OK, this is the move I'm going to make.
Well, Ed, thank you for having me. A couple of reasons. I mean, we were late to the party, and that will happen from time to time. We've been late to other parties, but the point is that you get there. And we saw it as an opportunity to step in, not just on the data center side of the business, but the PC upgrade cycle part of the business. And so if you look at the hyperscalers, they are spending or spent about $200 billion, dollars on AI in their budgets. And so we think the use cases are real, the technology's real, the monetization is real. And so this was an area we were underweight hardware in our tech exposure, and this was an area where we could jump in.
So you do not hold Nvidia, which is really interesting. The big story we're talking about this morning is what played out on social media Wednesday, that Michael Dell posted they're building an AI factory for xAI to power Grok. And Musk responds and says, well, actually, Supermicro is involved as well. So let's do some math, which actually my colleagues at Bloomberg Intelligence kindly walked me through this morning. If this deal is for Grok 3, Musk has said in the past he'll need 100,000 H100s for that. And if you assume the average price of a server rack's about $1 million, there are 36 Nvidia GPUs in each rack. You'll need 2,700 racks. That could mean $1.5 billion in bookings for both Dell and Supermicro if BI is right about the $3 billion deal value. So you don't hold Nvidia, but you kind of do indirectly through Dell. Is that fair?
Yes, I'm going to take that because it seems silly to not be in Nvidia. We have very strict valuation metrics, and so I'm waiting for the hedgies to go to the Hamptons, and then hoping we'll get a pullback in Nvidia. But yeah, I think that is the important thing to be thinking about. That the investment cycle, as the large language models become larger, the power needed to generate the metrics around that is going to augur well, not just for Nvidia, but for Dell and for Broadcom, we own the poor man's Nvidia, which is Broadcom. And I'm pretty happy with that holding. It's up 65% year to date, or 70, but that pales in comparison to Nvidia's 170%.
On the valuation question, when last I checked, and I don't have it in front of me now, but I think Nvidia trades at something like 45 times 12-month forward earnings, something like that. And so it's a rules-based issue for you. You just called Broadcom the poor man's Nvidia. Could you just extrapolate a bit why you'd say that?
Well, it's certainly not as much in the sweet spot. But Hock Tan, who, by the way, is the highest paid CEO in corporate America, he is a master operator of the business. So they've already made, VMware's been on the books for a quarter. It's accretive. It smooths out the hardware cycle. And they will be facing some competition, certainly, from Nvidia in the networking side of their business. But we just think it's a company that it has paid. I mean, we've owned it for a long time. It's a member of our 12 Best Ideas portfolio. And we continue to like it here. It's the cheapest of the group. And I love these old economy or old technology names like Broadcom, Oracle, Dell, who have remade themselves. And that's thanks to strong management teams who pivoted when they should have pivoted, just like Satya Nadella did at Microsoft, which is another 12 Best Ideas name for us.
One of the other top stories on Bloomberg today is this research note from Citi. And they argue that AI is going to displace more jobs in the banking sector than any other sector. And I was looking across your portfolio, and you have this 12 Best Ideas portfolio, which includes Goldman Sachs. So if we stick with the AI theme, what do you make of that Citi call? That it's going to be in banking where an impact to the workforce is most felt from AI?
Yeah, I don't think it's going to be the Goldman side of banking. I've been in this business for 40 years, Ed, and I've heard all sorts of prognostications about what will happen that never happens. I think artificial intelligence will augment workers, and particularly the kind of workers, professional workers that Goldman employs. So I don't think it's a bank teller, robocall, side of the business that will be potentially impacted. But that's not Goldman, at least not anymore since they've exited retail banking. And we think the M&A activity is certainly going to accelerate. So we still like it here. It's still very cheap based on our work. And so I'm not worried about that.
Henry Wren, who covers China tech for us, was just on talking about the Chinese consumer and how many of the big Chinese technology names are doing heavy incentive this week. If there's one thing that keeps Nancy Tengler up at night, I think I'm right in saying that it's the consumer broadly, but I guess principally in this country. Why is it such a concern to you, the state of the consumer?
Well, so I think there's two consumers. There's the baby boom consumer, which I'm a member of, who has half of the country's net worth. And so they're spending, they're retired, generally speaking, and they're not being impacted by this. They have big stock portfolios, but it's the low-end consumer that's just getting crushed by sticky inflation, which is still with us. Only on Wall Street do we say, oh, inflation's declining because the rate of change is going up less fast than it was previously. So I think it's wearing on them. The interest expense, the access to credit, all of this has declined. And then we know that full-time jobs declined in March year over year by 275,000. Hours worked declined. Wages in terms of average hourly earnings decline. So this is a problem spot for the economy. And the low end of the consumer is en masse much greater in numbers than the baby boomers. So I think we have to watch this. The retail sales numbers, though they're not comprehensive, were disappointing, and the revisions down were also disappointing.
Earnings season is once again around the corner. It's silly to say. Take that concern and give me your expectations for technology earnings in particular.
Oh, I think tech's going to continue to shine. And just for the record, we've been advocating overweighting tech since the fall of 2022, when everyone wrote it off once again as not the place you wanted to be, that the tech trade was over, that higher interest rates were going to hurt technology companies because that was an old school view of the world. But in fact, most of the mega cap tech names have benefited from higher interest rates. So we think earnings is going to continue to be a bright spot through this year and into next. And so we want to own the hyperscalers. We want to own the hardware companies. And they wrote off software a few weeks ago, but just wait a few weeks, and I think the hedge fund guys will be back in buying software. So there's my cynical view of the way this world works.